Good evening and welcome. My name is Jason Daig from CreditSpreadSlayer.com. I'm a Senior Portfolio Manager here at the site. And today what we're going to walk through is kind of review a post that we did last week. If anyone, as everyone remembers, we did a post with a nice 2-year chart with a rising wedge on the SPY ETF and our thoughts that we're looking at a nice little pullback over the next couple weeks here, and that we're going to be putting on trades starting next week to take advantage of this. So we've had a couple of people ask us online of how we actually go through the charting and how we actually identify those opportunities, and that's what we're going to review here tonight. As everyone can see on my screen, we're looking at a 2-year daily bar chart of the SPY. And I'm going to recreate the picture that we saw in our post from last week. And if you haven't seen that, go ahead and check it out. That's CreditSpreadSlayer.com, and just select the very opening picture, which will be our post from last week about is the market ready for a pullback. If you look right on here, we can see that way back here is going to be November 2011, going all the way up through today. I've already driven in one trend line here, and I'm going to go ahead and draw our second one in order to show the resistance levels from this rising channel. As I draw this forward, you're going to see that we come into an area of support and resistance right through the channel. Now this is very important because what this is doing is actually giving us our levels of where we're expecting this market to pull back over the next few weeks. And as we draw through with that support, we get a very realistic picture of where we feel the markets are going to be going. We can see that from all of 2012, we kept bouncing from the support channel back up towards the top of the channel towards resistance and back down. You'll see that we actually took not 1, not 2, not 3, 4, 5 attempts to break the uptrend resistance in order to actually get out and above the channel. And this would have been back in April 2013. So this was, again, before the market went on another 12% rally. Once you break that resistance, you can see that it now becomes an area of support. And we tested it once here in June, again in August, and one more time in very early October. And as you can see, we are now way extended from all these other pullbacks of about 5%. We're looking at about 6.5% at this point, and you can see it starting to falter at the top. And that's why we are projecting this market to actually fall down into the realistically about 170 at this point. We feel technically it can fall all the way down to 166, and that'd be our top channel right here. But overall, we don't feel the market is bearish enough in order to meet the actual technical pattern. And that's where you have to make these decisions of, are you going to go with the full technicals, or are you going to be able to step back and take a look at the full markets? And at CreditSpreadSlayer.com, we like to do both. We like to make sure that the overall market is positioned for a deep pullback, which at this point it's not. We're looking at a very mild 3 to 5%, and we're going to go ahead and capture that. Again, this is a 2-year chart. Next, we're going to move on to a familiar chart pattern that we've seen before, and this is going to be on the top, our 1-year weekly, and on the bottom, a 1-year daily. And as you can see, this is a little bit more of a busy chart, and the actual trend lines we drew in from the last time and the last chart are still here. So I can see that my support that we drew on the 2-year is actually following through on the weekly, which again holds to our pullback of about 166 as our max target, and that's a stretch goal on the weekly. On the daily, we see the same exact thing. Let's go ahead and take off a few of these moving averages to clean it up a little bit. You can see that, again, we're testing the support over and over again, and we're extended at this point, which is why we're looking for the bear spread on this security and a couple week duration. We're going to get into the details of that in a post later today. As we said last week, we always like to check multiple charts to make sure our data is good and we know that we have solid evidence of what we're looking at. And this is going to be a 6-month chart of the SPY on StockCharts.com. We do these live, everybody, so we don't like editing because it gives more flavor and more kind of character to our support here. As you can see, we have the same sort of support and resistance. We're coming in through the moving averages here and rallying back up, falling back in, and rallying. We're again at the top of that rally point, and we feel we're going to come back down. One final look is back at our standard 2-year chart, and this is what was in our post last week. You can see all of this is pointing to a pullback, and we've now actually reached 7%, which is way over what we feel is standard. Everyone, we'd like you to stay tuned to creditspreadslayer.com, and we're going to be putting out a post later on Monday with the trade that we're going to be putting on in order to take advantage of this weakness in the market in the next few weeks. Pay close attention because it's probably only going to be on for a couple of days to a week. With the way the markets are moving, we're going to capture these profits quickly. Thank you, everybody. And again, my name is Jason Daig from creditspreadslayer.com.